happening, HITI traders and investors? It's Rod with Power Group. Welcome back on the Pursuit of Wealth. Today is Saturday, July 2nd. Hope you're well today and having a great weekend so far. In this short video, I'm going to be discussing the stock HITI, ticker symbol HITI. Going to go over my price target expectations as we do have a weekly bear flag at the moment, which just means we could potentially see more downside. We'll take a look at some technical analysis on the high tide chart. I'll talk about what we need to see in order for this weekly bear flag to confirm, and if it does confirm, what the price target is going to be and what we can potentially expect for more downside. Before we get to it though, make sure to smash the like. It helps support me in the channel. It doesn't cost you anything. If you're new, you can subscribe and tick the bell to be notified on any future videos. I just posted yesterday a video. It was a live stream. It was pretty lengthy. It ended up being an hour and 30 minutes. Usually when I do these live streams and I interact with the public, it ends up going a little long. So I wanted to come on and do another video for High Tide. It's a name that a lot of people have been asking me about. And I know this probably isn't what you want to hear. You probably don't want to hear that the price action has more downside coming in terms of the technical analysis. When we look at technical analysis, it's not the end all be all. It's just a matter of probabilities, right? 60% it's going to do this, 40% it's going to do this. We don't know. That's all technical analysis is having an edge, right? So if we know that something has a 60% chance of playing out versus a 40% chance of playing out, we can prepare for the most likely scenario, but we can have a plan for both scenarios. That's the whole thing in a nutshell. Check that out if you want to see a more in-depth analysis and also some Q&A and just interaction with the public. I do think there's a lot of value in dedicating that hour and a half. You can even watch it on 1.5x speed. In a nutshell, we do have weekly bear flags across the sector. It's not just on high tide, it's across all of our Canadian and American names as well. And we know that the S&P 500 is still weak. We have pretty much entered a recession. The classical definition of a recession is 2 back-to-back quarters of negative growth. The media could potentially really push that narrative, right? If they start to push the narrative that we're in a recession and they're going to be making everybody panic, which means we could see more downside in the broader market. So the S&P 500 across the tech sector, if that happens, it's going to be headwinds for the MJ space. And it could be about another month or so before we see any kind of, safe banking or legalization progress in the US, which means that, in my opinion, we could see more downside. And like I said, if it was just high tide with the weekly bear flag on watch, that would be one thing, but the fact that there's weekly bear flags across the sector is very concerning. So what is a weekly bear flag? A weekly bear flag just means that, or a bear flag in general, just means that we have a type of pole, so a type of flag pole. We take the pole from the measured move down, and then we take it from the high of the bounce, and we measure it down. I'm using the log scale because it makes the most sense here, and I've been using log scale versus linear scale a lot lately. I find it a lot more reliable, but essentially all you do is you take your Fibonacci tool. I already have it drawn out here, but you take from the high to the low, and then that gives you your fib targets. And anything under the 0.3 to fib at 302 was a weekly bear flag. When we consolidate, all we're doing when we consolidate is we're losing the low of the previous weekly candle. All these candles represent is the price action given a certain time period. So you can see here we've been consolidating for the last 7 weeks, and then we finally started the weekly bounce. It's been a weak bounce. We didn't really bounce much. We bounced by about 6 cents. Essentially, anything under 302 is a weekly bear flag. So what do we need to see for this weekly bear flag to confirm? We need to lose the low here at 173. If we lose 173 USD, then that's going to confirm the weekly bear flag. There's already a lot of weekly bear flags confirming in the sector. If we take a look at Tilray, it's very close to confirming its weekly bear flag there. If we lose 302, we're targeting 225. TrueLeave already confirming its weekly bear flag, and the target is $13. CGC confirming its weekly bear flag as well with a target of $2.33. So again, if it was just high tide, that would be one thing, but we're seeing it across the space, and that's called confluence. When something itself is doing one thing, that's that's something to consider and that's something to be aware of. But when there's multiple names, both American stocks and Canadian stocks in the MJ space doing it, that gives us a little bit more, that increases the odds that it's going to happen even more to a name like high tide, in my opinion. And I know a lot of people listening to my voice are probably just, they're so fed up with listening to more downside, and they're just ready for the bottom to be in. But unfortunately, that's just not what I'm seeing here at the moment, especially with a name like High Tide. I know a lot of people are frustrated because they have really good fundamentals. They have great financials. As I've said time and time again, financials and fundamentals do not matter when you're in a full-blown bear market. This is a casing point, right? And if we take a look at the measured move, all you do is you take the measured move from the flag pole. So you have, here's the pole, here's the flag, right? It resembles a flag. And then you just take the pole and you move it here to the 0.382 fib, and then that gives you your target of the downside. The target here on the downside is $1. So that means that from current levels, we could drop another 50%. And again, I know that's not what people want to hear, but this is just what the charts are saying. I don't want it to drop any more than you do. I'm certainly holding off on any purchases at the moment because I do think that high tide is likely going to see more downside. I'll be a buyer at those levels. I'll probably buy more, probably around $1.75, again at $1.50, maybe another one at $1.25, another at $1 if we get there. But essentially, I'm just going to be dollar cost averaging. I didn't add too much to this. I do hold it in my portfolio, but it's probably like 2% of my portfolio at the moment, my MJ portfolio. So I'm going to be looking to ramp that up to around 5%, 10% at the most of my MJ portfolio. And like I said, I'll be looking to dollar cost average. And that's all technical analysis is, right? It's not guaranteed, right? There's only one guarantee in life, and that's that there are no guarantees. And if we take a look at what to expect here, well, if you're looking to purchase this stock, well, just knowing what we know now, if we could potentially see a downside of $1, we know that the S&P 500 still has yet to confirm a daily uptrend. It's still in a weekly and monthly downtrend. The first time it's entered a monthly downtrend since 2008 financial crisis. So there could be a lot more downside in the broader market. We need to prepare. So if you know that this is the potential price target to be expecting, what can you do differently to prepare, right? Is that going to change your purchasing plan? Are you going to maybe hold off on purchasing now and maybe look to enter a little bit lower, right? Or maybe stagger a few different orders? Just because the weekly bear flag target of $1 is measured through that measured move doesn't mean we're going to get there, but we could, right? So you need to have a plan for both scenarios. That's why I'm going to be dollar cost averaging. If we take a look at the weekly time frame, we're still well below the 10-week moving average. We're still extremely bearish on the stochastic. MACD is seeing a bit of a curl here, but still quite a ways away before we see a bull cross there. So not really much to see in terms of the weekly macros. In terms of the moving averages on the weekly, we do have the 50 crossing down through the 100. And when we see shorter term time frame moving averages cross down through the longer term, that is bearish. When we see it the opposite way, when the shorter term crosses through the longer term, that's bullish. And you can see here the price reflected that. We shot up dramatically. But now we're seeing a bear cross. Does that mean we could see even more downside? I think so. Again, more confluence that we could be heading down to that $1 target. We also had a death cross back here in September. And that's just, again, on the daily moving average, when we have the 50-day crossing down through the 200, that is perceived as bearish, and it's called a death cross. And then back here, we had the golden cross, which is when the 50-day crossed through the 200, and then look at the upside that insinuated after that. So again, this death cross, we've already dropped from the time the death cross occurred. It was around $6. So we've dropped dramatically since then. But again, it's not looking good at all at the moment. Again, check out this video here if you want to go more in depth and see some more analysis across the whole entire sector and see me interact with some of the community as well. But again, not looking good in terms of the high tide chart. I'm going to be queuing some buy orders, and like I said, I can potentially expect a drop down to that $1 area. All right, thanks again for joining us on the Pursuit of Wealth. I appreciate you tuning in, and if you could smash the like one more time, it helps support me in the channel, and tick the bell, you'll be notified on any future updates. Thanks again for joining us on the Pursuit of Wealth, and we'll see you in the next video.